Hello, I'm Bob Chambers, and welcome to Trading Talk with Bob, where we investigate market intelligence intelligently, and we have a lot of fun doing it. On today's show, we packed up the crew and headed out to Palm Springs for the 2012 Cambridge House Economics Seminar. There we ran into one Mr. David Morgan, who, as always, had some very informative and fascinating things to say that I think you'll find quite interesting. We'd also like to thank our sponsor, Capital Metals Trading Group, for making today's show possible. They're a very cool bunch of guys who have some very unique and innovative trading tools. Check them out at cmt-group.com. So, without further ado, Trading Talk's interview with David Morgan. Hello, I'm Bob Chambers, and welcome to Trading Talk with Bob. Today we're broadcasting from the 2012 Cambridge House Economic Summit in Palm Springs. And I have the considerable pleasure of having with us Mr. David Morgan, author, economist, and publisher of silver-investor.com and themorganreport.com. David, thank you so much for taking the time out of your busy schedule to be with us here today.
Bob, pleasure, especially in the sunshine.
Yeah. David, with everything currently transpiring in the global financial markets and socio-politically for that matter, why isn't every investor or saver in precious metals?
I think it's a lack of education. I think it's lack of knowledge, lack of monetary history, and lack of getting the truth. I mean, basically, an investment advisor, any stockbroker or commodities broker or financial planner should really, one, have a very basic understanding of what money is. I mean, the subtitle of the Morgan Report is Money, Metals, and Mining. Why money? Well, money is transcendent. More people around the planet are interested in their money than anything else. It's pervasive in every way. It supersedes race, it supersedes nationality, it supersedes economic class. I mean, the only people that are more concerned about their money than the poor are the rich. Everyone's concerned about money. So it's some subject that everyone takes for granted and they don't understand the topic. Me, I look as somewhat of a monetary historian, among other things. I mean, silver's my expertise and I don't mind that moniker, but I'm much bigger than that. And the second thing is money, metals, and mining. Well, metals have proven as the money of choice. If it's a true free market, the people decide what money is. People say, well, it could be anything. It used to be seashells or salt, or it could be paper, or it could be electronic digit, or it could be, well, if that is logically true, and money can be anything, then money could be silver and gold, if you apply that same logic. And of course, again, going to reinforce the point, silver and gold is what the people have chosen when they chose seashells or beef or sand or whatever. It always had some problem with it, whereas the classic Aristotelian logic behind a precious metal is it's rare. It is fungible, meaning an ounce of gold is an ounce of gold no matter what the form is, as long as the purity is the same. It's recognizable, and it preserves wealth. So the fundamental facts of gold and silver have stood the time of 5,000 years. People that know that realize why they should have some savings in real money. But you don't get that message from CNBC, you don't get that message from a certified financial planner, you don't hear that from your stockbroker, you might hear that from a coin dealer here and there, but you're not going to hear it. So it's undereducation in my view, Bob. I think it's, people aren't responsible for themselves, especially in today's, I got to have a trainer environment. I'll just go on that rant for a minute, but people are taught they're so ignorant that they can't do anything on their own. They have to, they can't do their own exercise program, they got to get a trainer. They can't, figure out their own finances, they got to get a financial planner. They can't figure out what they should eat, so they get their own chef. I mean, I'm being a bit facetious, but the idea is, no, well, suck it up and learn yourself and be an adult, get responsible, and make your own financial decisions. It's your money.
David, until some trust, order, and confidence is restored into the markets, you recommend holding physical product until such time, if ever, trust and confidence is restored. Could you expound upon that a little more?
Yeah, Bob, if I go back and just give you my mission statement, which is to teach and empower people to understand the benefits of an honest financial system. I mean, basically the breakdown is that the whole system has become so corrupted that from the top all the way through the bottom, that people don't know what to trust. And a paper monetary system is based on confidence, and that confidence is breaking down rapidly. We just go back and look at central banks. They're net buyers of gold now. Sovereign governments are buying gold. So everyone understands that the game is almost over. And because they're doing it, I think the individual should, again, wake up and realize that's probably the only asset class that's going to get them through these turbulent times financially. I wouldn't recommend 100% in the metals, but I think 10 to 20% weighting is probably very, very important for anybody that gets the idea that these financial markets are in turmoil, to put it politely.
David, these are unprecedented times from a financial and economic standpoint. Do you think it's out of the question for an unprecedented move in gold or silver to happen in the next few years?
My personal belief is that the move in gold and silver in terms of paper prices are going to go down in economic history books. I mean, never in the world have we had a system that didn't fail, that was a paper-based or unbacked monetary system. It's been tried again and again and again. China was the first one to use paper money. They've used paper money 8 times. Guess what? It failed 8 times. That's a 100% failure rate. Every time it's been tried throughout monetary history, it's failed. So the idea that the United States dollar will not fail is one that doesn't have a good track record. All of them always have. And what will that mean? Well, what that will mean is that the precious metals will do the reciprocal or the opposite of what the dollar does. And we're already seeing that, but I think the move ahead is going to be substantial. Just to get to fair value in today's paper price for silver, you'd have to be about $150 the ounce. And that's fair value. Markets usually go undervalued to fair value to overvalued. So in overvalued terms, I think you could see silver go to, hundreds of dollars an ounce.
David, why do you think we are generally so underinvested in gold and silver relative to our Asian counterparts?
A lack of knowledge, a lack of understanding, a lack of education. I think that people, again, turn over, money's too complicated a subject. I need a financial planner. My stockbroker knows what's best for me. Gold and silver are volatile. And there's no real promotion on gold and silver. I mean, most of your mainstream financial products that you hear about on the mainstream press and then, the financial channels don't emphasize gold at all, though, gold does get some press, much more than silver does. But nonetheless, it's, not really given the truth. And what I mean by that is, gold has been the best asset for the last decade. Gold has gone up every year for 10 years in a row. And that would be something that you would think in an honest financial system that the CNBC talking heads would talk about. Well, we looked over last year, John, and guess what? We found that gold was up again this year. In fact, it's the 10th year in a row, 11th year in a row. But you don't hear that. You hear it at conferences like this, but you don't hear it in the mainstream, because I think if the general public got the idea that gold was continuing to go up, they might get on the internet and type in, why is gold going up, into Google and start reading.
David, you're big on gold and silver mining stocks. What's the prudent play with this type of investment at this time?
Well, I'll just back up a slight bit, Bob. I am big on the mining shares, but before I've always advocated to have a physical position before you move into that arena. I really like that arena because you still get leverage. And one of my friends here at the conference, Frank Barbera, I listened to his lecture this morning, and he pointed out like Newmont, which is a big major gold mining concern, has got a dividend policy now that every time that gold stabilizes at $100 an ounce higher, they increase their dividend rate. So if gold were to go, for example, to like $2,500 an ounce and stabilize there for a certain period of time, the dividend rate would be like 6.7% yield. Now that's a nice healthy yield. I think any financial planner worth his weight that's really earning his money and has his heart in the right place for his clientele will be looking at something like that. I mean, the biggest question I get several, but one of the biggest ones is, how do I earn income from gold? Well, Newmont is now going to pay you an income from owning gold. So that's just one. And I focus a little differently. Most newsletter writers are in a box, and the box is that they really tout, penny mining shares. I like to speculate like everybody else, but I really don't emphasize that part of the market. I look at the top tier, the mid tiers, and the growth tiers. I do a little bit of speculation. I do a lot of good research, and we really try to find companies of merit before we put any suggestions out.
David, everything else being somewhat equal, what are things going to look like in 2014 when the Fed releases its lock on zero-base interest rates? What is this going to do to the dollar, inflation, and the recovery in general?
Well, the Fed sets the discount window, and they set the rate that banks can borrow from each other and the rate that the bank can borrow from the Fed, and then put that money to work at a higher interest rate, and that's called the spread. And anytime you get a positive spread, you're going to re-liquefy your balance sheet. And the Fed is doing that deliberately because the banking system in all reality has failed, but it's not failed to the point where we can't get to our money. Having said that, the market actually controls interest rates beyond the discount window, what the Fed sets. So you could actually see an increase in interest rates by demand or demand and supply of the money system itself. That could take place. So far it hasn't. The bond buyers are the Fed. The Fed's actually buying its own debt, so to speak. I mean, the Treasury or the United States government borrows all the money into existence, so they're really not printing it directly. And then the Fed, when the Treasury wants to sell off or borrow more money, the Fed goes ahead and purchases some previously issued loans and creates actually cash into the system. Regardless, I think you're going to see a different situation. I think 2 years from now, you'll see the middle class getting lowered even further. And of course, people listening to the show don't understand money or inflation, don't get it. Well, I was only making $12,000 a year in '72, and now I make $82,000 a year. It's a lot bigger number. But those numbers are just for the idea. The idea, that might put you in positive. I don't know. I'd have to do the math in my head. But the point is, you have a lot more dollars, but your actual standard of living is only maintained because you put your wife to work and you got a second job and maybe made a couple good investments. In other words, the purchasing power has continued to deteriorate. The average American's wealth status has actually gone down, not up during that time frame. And this is something that's critical, and that goes back to what I write about, money, metals, and mining. I keep pounding in my reports and in the public domain about the seriousness of this problem, because people often say, well, no one told us, or I don't understand. And you're not going to see me very often on CNBC. I do get on Fox Business actually fairly regularly, but nonetheless, there aren't a lot of people telling the general public, the investing public, the truth about these matters.
David, can you comment on the benefits of buying gold or silver coins relative to gold or silver bullion in times of uncertainty such as these? Or is there a benefit?
I think there is. I think, it's like owning 1 unit of a 100-ounce bar versus owning 100 coins. In the coin form, you've got 100 decisions you can make. You could sell 1 coin at a time, 10 at a time, 20 at a time, and that kind of thing. Whereas if it was in bar form, you have to make 1 decision and it has to be correct. So I really, teach and have taught from the beginning that if you're going to start in the physical arena, you should really start with small coinage first. And if you're a high net worth individual, bars are easy to stack and track, but that's an individual case. But most people are better served by owning the coins.
David, with all the negative news every time you open a newspaper, turn on the television, or go to the web, as a trader, is there a contrarian sentiment to these scenarios that might want to shape your strategy going forward?
When I first started in the markets, I had and I still do, have a very strong math background. I mean, my first degree is in engineering before I went on to, the economic side of things, which is my passion. And I thought I could do really well in the stock market based on, my ability in math, figuring out what the true price to earnings ratio is, or, what the earnings forecast would be, or, what the margins are in a given company or whatever. And I found out pretty early that knowing the math of a company is a tool, but only a tool, but it's really not the best way to determine where the market's going to go. So I kind of had to regroup and think about it. And what I determined was its psychology. And that's one that's hard to get a handle on because there's sentiment indicators. And I have a very good, key to keying into sentiment because of my service. when I have a lot of new subscribers, I know sentiment's very bullish, and when no one's buying our reports at all, I know sentiment's very bearish. And that's a good indicator. When it's very bearish, that's the time to buy. When it's very bullish, that's the time to sell. Right now, I'd say certainly that's a good indicator. I would say I don't agree totally that it's the lowest I've seen personally, based on my work and what I see. But again, I think that there's a reason for the market to go up higher that's different than sentiment, although that's important. I don't want to contradict myself. And here's something that we haven't talked about. What I've been able to determine over the last about 6 months is that we're ready for the next leg up because the professionals are coming in the market now. The last resource show I did for Cambridge House was in January, and most of the retail people are scared. Sentiment is low, as we just mentioned. But the professional money managers, the hedge funds, the people that have real money to invest, not saying that the individual doesn't, but I mean talking about grouped money, is ready and getting back into this market in significant ways. And it's not only in the mining side, it's also on the coin side. I happen to be pretty well connected throughout the industry, as you know, and two of the larger wholesalers / retailers in the coin business both have got massive campaigns going through Wall Street to buy physical product. So that is the kind of money that has to come to this market to drive it higher. It is coming to this market, and I believe that we're going to see, a good move in the metals this year.
David, is there a chance that the U.S. will revert to the gold standard to defend the dollar's position as a world's reserve currency?
I've been asked that question many times, if, do you think we'll go on a gold standard or not? And the answer is, one, I don't know. I would like to see it, but I think if it did happen, it would be in a pseudo gold standard. It'd be a partial backing, not in a classic gold standard. I don't see ever a classic true gold coin standard being enacted in the United States ever again. But again, going back to my mission statement, as long as there's integrity and honesty in the system, actually a paper system works in theory. It never has. It's always destroyed itself, and that's because of human nature. I mean, people just see an edge and they start to increase the money supply even for their own good or for a good cause or a good package, a new, rapid maglev train across the United States. It's going to cut down on the pollution and everybody can ride it for free, or whatever the great, mandate is. These things get corrupted over time. But I would like to see some integrity installed in the system. I think the only way you're going to be able to do it is by a partial gold backing, or maybe some kind of commodity backing of some type. But time will tell. We'll see.
David, you're speaking at the summit here. Can you give our viewers a brief synopsis of what you might be speaking about?
Yeah, well, Bob, about every year at least, I revamp my speech because, I hear myself talk every day. I get tired of it. But seriously, I decided to kind of make it a more general and kind of a fun speech, and I put myths in the silver market, and I go a few myths in the silver market, and I'll just do one with you. And it goes back to your coin question. One of the myths about the silver market you get from a lot of coin dealers, and maybe even a few more aware financial planners, although that's very rare. But the thought and the actual wording is, well, yeah, gold and silver are okay, and I think everyone should own a little. But I just beat that up because the idea is everyone and a little, two very ambiguous terms. Who's everyone? And how much is a little? So I did a little video on this recently. I said, okay, well, if everyone is the planet, we're talking about 6.7 billion people on the planet, but I'm going to cut that down. I'm going to cut that down to 5% of everyone, just the United States, okay? 310 million, 320 million people. And how much is a little? Another ambiguous term. Is a little 1 ounce? Is a little 2 ounces? So I went ahead and took it to 2 ounces. I think we all agree that even at $35 silver, $70 is not a big event for most people. I call that a little amount. So I said, look, if you had 350 million people, which is a bit more than the true population of the U.S., and everybody bought 2 ounces, that's roughly 700 million ounces of silver, which is the entire mining supply of the globe on an annual basis. So if everyone bought a little, you would buy the entire mining supply with none left over for industry at all. And it's a little of a little. In other words, it's only 5% of the population buying something like $70, which, in the average income of the United States, or even a welfare recipient, could certainly afford $70 a year. So the idea is it's impossible for everyone to own a little. Impossible. And that's the point I want to bring home very strongly. They call it precious for a reason. It is precious, it is scarce, it is hard to get to, and it does take time and energy.
David Morgan, silver-investor.com and themorganreport.com. David, thank you so much for being with us here today. I really appreciate you taking the time from your busy schedule to join us.
Bob, true pleasure. Thank you.
And this is Bob Chambers for Trading Talk, wishing you a good day. And remember, please pay it forward.